trade. Chris Conway from the Australian Stock Report joining us live out of our Melbourne studio for more on markets. Chris, good afternoon to you. Welcome into the program today. What do you make of the moves in the market? Because I know, you look at it from a trading perspective. We're down about 0.4%. Do you think we're going to go further from here? Do you think we've reached a peak for the time being?
Good afternoon, Ingrid. I certainly think we've probably reached a peak for the moment, but that doesn't mean that we have to move sharply lower. I wouldn't have thought in order to find a base of support. I wouldn't be surprised to see us sort of muddle sideways for a period and just consolidate what has been an exceptionally strong run. Even if we do have a losing session today, it's 18 out of the last 24 sessions will have been winners, 75% hit rate. Clearly not sustainable. We know markets, everyone knows markets don't move up or down in a straight line, but yeah, certainly what I'm hoping is, as I said, is that we grind sideways for a period and consolidate. But we will need a catalyst to get above 61.50. We arrived here in such quick fashion that I think now is everyone sort of looking to the horizon and saying, what is the thing going to be that's going to make us break above that, January high?
I guess in terms of a catalyst, what would you be looking for?
It's $1 million question. I haven't thought that far ahead, Ingrid. Maybe bond yields in the US coming back a little bit, although, now it seems like they're will be firmly entrenched above 3%. And look, I don't think that's cataclysmic for markets anyway. The big migration of money away from bonds and into stocks doesn't typically happen, at least historically, until yields hit around 5%, and we're a long way from that. So yeah, maybe a relaxation there. I can't see anything, particularly strong on the local horizon that would see us get above that point.
All right, well, let's talk some company news, specifically on Treasury Wines, because we're just looking at that stock, of course, taking quite a hit today. It's down by 11% right now, Chris. Do you think it's warranted? Obviously, the reports in the AFR about the supply glut in China coming from a lot of customers. I know Treasury's responded to that. They've been talking about, the substantive claims made by suppliers or distributors in China saying only discipline and sustainability remain the cornerstones of Treasury's growth in North Asia, and it cautions reliance on feedback from selected customers in China. Is it kind of the fact that where there's smoke, there's fire? Are you concerned? The market's obviously concerned.
Yeah, look, I would say that where there is smoke, there is potentially some fire, and there is reason for concern because TWE has a history of this. I don't know whether anyone else on the show this morning has pointed to it, but it was back in 2012 where they had some issues expanding into America. They were accused of misleading the market and saying that they would hit a guidance, which they did ultimately hit, but it's because they were pumping, low value stock into that market, and famously they tipped $30 million of wine down the drain. What a shame that was. So, like I said, they've got history of doing this, at least in terms of oversupply, and potentially they're facing that same issue now in China. So, yeah, look, I would be concerned. Is the 10% sell-off warranted? Look, I don't know. We've got to assess the validity of these claims. But, like you sort of pointed to in the lead in there, I read with great interest the commentary coming back from TWE. It was the most polite smackdown, and it really was a smackdown. I'll just read from the cheat sheet here because it is a quote. Obviously, customers coming out there saying it may underpin motivations for underperforming customers who are not growing with the company. If that's not the most polite smackdown you've ever heard, then I don't know what is.
So do you believe it? I mean, do you think that sounds warranted? I mean, it sounds believable.
Well, look, I would say, I would make this point. I don't think the AFR would come out with a story like that they know is likely to have a big impact on a share price unless they probably heard from multiple customers. I mean, Ingrid, you're a journalist. We all know about what sort of sources, how strong sources need to be, and there needs to be multiple sources in order to take something to print or take something to air. So, yeah, look, the AFR, they don't miss on a lot of these things, but that is where we're at now, is assessing the validity and the veracity of the truth of those claims.
So what do you think? Because a lot of people we've had on the show, and I mean a lot of people in general, fundies and investors have really liked Treasury Wine for the China story, and I just wonder if that China story has been overdone with Treasury. I mean, there's plenty of businesses that have exposure to China. Do you think it was overbought anyway on the China-facing story?
Yeah, well, a nice parallel that we might draw is A2 Milk, sort of a China story as well. They're both, obviously for different reasons, but have both copped a big whacks in the last couple of days because of problems, with the growth in China that everyone was expecting to continue at a clip that clearly isn't sustainable. So, yeah, like I said, it comes back to me, particularly with TWE, is they do have form with this. That's the thing that I'm worried about. I know it was back in 2012, but they have had oversupply issues before, and in the past obviously didn't deal with them well at all.
All right, well, let's move on from Treasury for the time being, because there's a bunch of other stories to get through. We might stick with oil for the moment and just talk Santos with this Harbour Energy bid, of course, coming in at about $6.63 if you convert it to Aussie dollars from that US $4.98 offer. What do you make of this one? Because I guess, it's been revised somewhat, although the value remains pretty similar. And I guess the question here is, oil prices have been rising. Does it reflect enough value for Santos shareholders?
Yeah, well, that's the big concern and the big question, and certainly there's already been some signals from Santos that it won't be enough, exactly as you say, Ingrid, because of the rising oil prices and, expectations that prices could indeed continue. As you know, I'm certainly one who's in the bullish camp for oil prices. So, there's that element, but then there's also the element of, the Foreign Investment Review Board. So Santos has some Cooper Basin assets that I would have thought would be considered strategically important. So it might not even get past FIRB. The irony there is that Harbour is probably more interested in the PNG assets rather than the Cooper Basin assets anyway. But yeah, there's a few planks to this one. Again, signals that it won't be enough. So they'll be hoping for again a higher bid, but that probably doesn't seem like it's coming.
No.
So yeah, it sort of leaves Santos shareholders in a state of flux. But obviously they'll take direction from the board anyway.
Okay, we'll watch that one closely. But while we're on oil, what's your take on oil going forward? There's a lot to watch, I guess, in this space, and we've had some IEA numbers which have, showed some supply issues. What's your take on where oil prices are heading in the near term?
So yeah, look, Ingrid, I've been on record saying that I think high 70s, maybe low 80s is a price that could be seen at some point this year. Again, we're only in May. There's still the majority of the year to go. I think they will be sustained, and it comes back to supply and demand. It's economics 101. Supply restrictions on one side. We all know about the Saudis and OPEC, of course. They want to extend those production cuts out to 2019. On the other side, you've got synchronised global growth, so demand should be picking up, and of course it's also US reporting seasons, US driving seasons. So, as I said, economics 101, when there's more demand than there is supply, prices can only go one way.
All right, we'll be talking with Vivek Dar from CBA shortly about oil in a bit more detail. That's in about 20 minutes' time for those who want more information on that. But Chris, I want to move on to a couple more company stories as well, which we're watching, and that's Telstra. Obviously, we've been watching Telstra quite closely, given the update earlier in the week. There's been some analyst reaction to that. What are you watching when it comes to Telstra? What's your take on this business going forward, and I guess some of the catalysts for revenue as well?
Yeah, so the big concern that I've had for a while now was around, the mobile division, and there was some distortions in their mobile division because they had benefited from their competitors' network issues, so Vodafone and Optus. They have now returned to normal, I guess you'd say, and Telstra's more than average market share has come back. And that is creating a big revenue hole. There's also, the pricing issue. We know Telstra charges a premium. And they used to be able to get away with it very easily because they had better network coverage. But now in the major population centres in Australia, that's not the case. So unless you're in regional Australia, you probably don't really care. So there's revenue holes, appearing everywhere. There's the NBN issues. And of course, there's the negative sentiment surrounding the fact that there are some analysts out there on the street now that believe that the dividend is unsustainable and will be cut. Macquarie's the one that come to mind. They estimate 20 cents over the next 3 years and then lower again thereafter. So it doesn't even now have the dividend support. I'm a trader.
Chris, on the dividend support, that will change the investor base for Telstra if that was to become sustained, because obviously we've seen them cut their dividend before, but they are known as a yield stock. A lot of people hold it in their portfolio. If they do cut the dividend and they continue to cut the dividend, does that change the whole investor base for Telstra?
Yeah, I would think so. I was having this conversation with one of my colleagues yesterday, and yield can often be a misnomer. It's all about quality yield. Now, I would say Telstra right now is not a quality yield because it's subject to revisions and lower revisions. So, who cares if you're getting 7% if you're giving up 25% in capital losses? So, yes, I would say it would significantly change or alter that core base, probably at the margins, not the entire base, but certainly I think they will lose some of that core base. And when that money starts to flow out, other money will follow it. So, someone was on earlier in the week talking about a valuation around $2.14. I apologise, I can't remember the analyst who it was, but I don't think that is out of the question.
Okay, watching Telstra then. And finally, I want to get your views on Magellan as well, and your views here, because obviously it is leveraged to the equity market. So I wonder where you see that going forward, particularly in the next sort of 6 months towards year end.
Yeah, so look, obviously with Magellan, you've got to be a little bit backward looking and realise that equity markets and, the Australian equity market and the US equity market have performed well, and it's in that sort of environment where, someone like Magellan can attract FUM and, they get exponential return on that because their cost base doesn't go up, but they get the benefit of, performance fees and management fees and the like. Also, they've recently bought out early funds management, and John Sevier there, has had exceptional performance here in Australia, and now they've got the ability to take that Australian arm. Of course, Magellan was previously just international, and attract, money that's interested in Australian-only investments. So we just think it's well placed. It's had a bit of a pullback in the share price, but again, you're 100% right. If markets can continue to go up, that's what's going to be of the most benefit for Magellan.
What about the other sort of fundies? Do you see any benefit for them as well then, in taking from some of the tailwinds there?
Yeah, so Moelis is another one that we have looked at and quite like. So, but yeah, it's a similar story across all. We just think, given the strong long-term performance of Magellan, that would be our pick in the space.
All right, Chris, we really appreciate your time on the program as always. So thank you so much for joining us today.
Thanks, Ingrid. Always a pleasure.
Chris Conway there from Australian Stock Report.